of a traditionalist, but these tools, and they're going to get better, are pretty remarkably powerful right now. It's worth trying them out.
Well, and all right, to be fair, I love to write too, and I don't want anybody writing, poetry or a great novel and that kind of stuff. But I do think about, Brad, in all of our worlds, there's a great, like you reference, real estate agent who's got to describe a house. Like you could think about that, how great that could be for them to just kind of toss it off to a chatbot to basically, or a bot to basically write that up.
And that I think is where the real power of some of these services are. The writing that maybe it was never sort of high value content to begin with. The marketing.
Sorry, real estate agents that are out there.
Sorry. Well, you know what I mean.
I know,
I'm clumsy use of words,
No.
But marketing copy on websites. Real estate's a great example. There's not a lot of variety in the descriptions, and what this does is superpower the people whose jobs it is to push out these listings or to create these websites, and it really empowers someone. Now, it is going to hurt, I think, the entry level, freelancer that maybe got the job on a freelance board and was being paid to churn out some of this copy that we're going to now see that the AI is doing it instead much more efficiently.
Yeah, it makes me think about, I tried to use it to help me write the tweet language for some stories I had to tweet out for my other full-time gig at QuickTake, and
how'd it do?
It didn't help me that much, so I was really bummed because I didn't want to be writing the tweets. But if you have any tips for me, Brad, please let me know.
Well, Brad, have you played with it?
Oh yeah, no. I mean, I've definitely, like a lot of folks here, have been experimenting with Chat GPT. I was starting to, some of these other web tools, they use the API and they give you templates. So if you want to write, the real estate listing or a business cover letter or website copy, you can go into kind of a specific domain and it gets a little better. And yeah, I think what it is it's a head start, but I also want to be cognizant that what we're seeing is really the beginning, and this is, GPT-3, what OpenAI calls it, and we're going to see GPT-4 later this year, and already the hype is getting louder for that, and I think all these tools will improve quite a bit.
Well, it's interesting you say that, Brad, because it makes me wonder if in a year we're all going to re-listen to this interview and feel like we sound so ridiculous, being like, oh, it's not good enough. We need to be writing still. Will we look back on this and be super embarrassed by ourselves, do you think?
I'm always embarrassed by the things I can go back to stories I wrote 15 years ago that have not held up. But, I think, look, I'm gonna remain an optimist and say that there's an alchemy to human creativity, to our facility with language, to our ability to research and to reach original conclusions that maybe the AI will, knock on wood, never replace, and there will always be a role for us ink-stained wretches.
Well, and you know what I do think about? We talk about this with, the digitization of our world or something, whether it's, things like this that help a private equity investor, maybe smaller deals that they would never look at, Brad, that they can put it into, I don't know, using AI or what have you, that can analyze some of those smaller deals that might actually get done, but that they would never have spent time on otherwise because it wasn't enough money. Or a doctor who somehow is using, AI to filter through things and figure out where they need to be and help them, deal with more patients. I mean, I agree with you that it just feels like we're at the beginning, and I wonder where all this goes, and I do wonder all this attention, how much more money it brings into this space, the startup space, and how that provides some more momentum going forward.
I mean, one thing that I can say without hesitation, being in this field and covering technology for a scary amount of time, is that when new technology like this is introduced, we tend to wring our hands and spend a lot of time talking about the potential drawbacks. And with merit, we're talking about cheating in colleges right now, and the way in which students might take shortcuts, and other, the lack of regulation and the misinformation that some of these AI engines produce. And yet we're often, we can't possibly imagine what the really disruptive applications will be. So the ones that you mentioned, Carol, sound right to me, but I have a feeling that we just don't even have the vocabulary or the imagination to really understand how this technology, as it evolves, will change business and society.
So, Brad, what is your number one question about what happens with ChatGPT and ChatGPT-like features moving forward? Is it regulation? Is it where the technology goes? Is it something else that I have not said?
Well, it's certainly where the technology goes. How rapidly will it improve as OpenAI continues to iterate on GPT? And it's also what will we see from Google and Amazon and other big tech companies as they kind of unlock their own AI vaults and finally show the world what they've been working on for so long. I really think that this is just the very tip of the iceberg. And a lot of these companies have been hesitant to kind of show their cards because they didn't know how the world would react. And now OpenAI has led the way, and I'm very curious to see what we're going to see from some of these other companies.
All right, well, we're going to leave it there. We're so glad that you've been watching the tech space, Brad, by the way, for a long, long time. We hope you continue for a long, long time. Love it, love it. Brad, thank you so much. Bloomberg News Senior Executive Editor of Global Technology. He, of course, is Brad Stone, author of The Everything Store, Jeff Bezos in the Age of Amazon, and, of course, Amazon Unbound, Jeff Bezos and the Invention of a Global Empire, joining us via Zoom from our San Francisco bureau. Yeah.
I regret not asking him about how AI plays into Amazon moving forward because he has that very specific background in Amazon. We'll bring him on next time and ask.
It's a good point. I'm sure he's thinking about it.
Yeah.
All right, guys, let's get back to World and National News. Off to D.C. and Nancy Lyons in our 99.1 studio. Hey, Nance.
Thanks, Carol. U.S. Treasury Secretary Janet Yellen has spent today in Ukraine. It's her own secret trip that comes a week after President Biden's surprise visit to Kyiv. Yellen's trip was intended both to emphasize globally Washington's commitment to Ukraine and to demonstrate back home why the country needs billions of dollars in non-military aid. Well, Congress is back in Washington, and Republicans in the House are looking to make budget cuts, with Ukraine a possible target.
Republicans say they're looking for savings in every possible account and that President Biden should make a stronger case for Congress to send more economic support to Ukraine. This week, the House Appropriations Defense Subcommittee and the Senate Armed Services Committee hold hearings, but any final funding deal would need bipartisan support, including 60 votes in the Senate. Still, the GOP is looking for low-hanging fruit for spending cuts, including the United Nations, especially the Human Rights Council. In Washington, I'm Amy Morris, Bloomberg Radio.
A high-profile Democrat is jumping into a U.S. Senate race in Michigan.
We all know America is going through something right now. We seem to be living crisis to crisis. But there are certain things that should be really simple.
Congresswoman Alyssa Slotkin announced she is running for the seat that will open up when Democrat Debbie Stabenow retires from the Senate next year. Slotkin, the former CIA intelligence officer, is coming off the third most expensive House race ever last year. The only other candidate in the Senate race so far is Republican State School Board member Nikki Snyder. President Biden faces a big obstacle in his bid to slash the student debt of more than 40 million people, a U.S. Supreme Court that has repeatedly thwarted his agenda. The administration will defend the plan tomorrow, claiming it's doing exactly what former President Trump's team did in 2020 when it eased student loan payment rules. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:41 on Wall Street. I'm Charlie Pellet. Stocks are now trading little changed. We check the markets all day long at Bloomberg. The Dow up barely, up less than 0.1% right now. The S&P up 4 points, a gain of 0.1%. NASDAQ holding on to a 51-point gain, up by about 0.5%. And the 10-year yield 3.92%. Stocks have paired earlier gains as a slew of data points to a resilient economy, adding to evidence that the Fed will remain restrictive for longer than previously expected. Today, though, a more optimistic outlook for earnings estimates that is helping ease fears that inflation will remain entrenched even as growth slows. Katrina Dudley is portfolio manager at the Mutual Series, and she told us she is keeping a close eye on wages.
Don't forget, inflation is somewhat of a catch-22, because if we have inflation and then we need to pay our workers more in order for them to be able to afford goods and services, that increase in wages then feeds back into that inflation spiral.
Citigroup expects to incur about $190 million in costs from winding down its consumer and institutional banking operations in Russia. Citigroup shares, they're up now by 0.6%. Recapping, S&P 500 index up 0.2%, higher by 7 points. 10-year yield 3.92%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week, watching us as well. This is your daily reminder from Innovation Refunds. The ERC isn't a loan. It's money your small to medium-sized business may be eligible to receive for keeping employees on payroll in 2020 and 2021. Get an estimate of your company's potential refund today. Learn more at getrefunds.com.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just about 17 and a half minutes left in today's trading session, and we've got stocks. We're still in the green, but not really big moves, well off our best levels, Maddie, of the day, and we're just kind of off our lows of the day, as you heard from Charlie. But yeah, it's, just kind of this interesting environment where we got some upbeat economic news, which good for the economy, but yet a reminder that the Fed's going to continue to be aggressive when it comes to interest rate moves.
Yep, and not a lot of movement today in terms of volume as well, but we are going to have a great conversation on this. It's time for the Drive to the Close with Marcy McGregor, Senior Investment Strategist and Managing Director, Chief Investment Officer of Merrill and Bank of America Private Bank, on the phone with us in New York City. Marcy, great to speak with you, and thanks for joining us. I just want to start macro vibes with you. The market's a little meh today. We've got more data this week showing economic resilience. How are you feeling?
Yeah, thanks for having me on. I think this market was starting to get really enamored with the idea of, an economy that might not even have a soft landing, but a no landing. It was falling in love with the idea of a Fed pause. But I think it was a market that wasn't reflecting macro reality, which is leading indicators have been declining for 10 straight months. And maybe we're seeing a little bit of a reacceleration in data early in the year, but I think that means more Fed rate hikes ultimately. And the market in the last week has really repriced those expectations.
So do you think that that's permanent, that that's a market consensus kind of getting in line with the Fed?
Yeah, I was really happy to see that gap between what the Fed is telling us and what the market was expecting close. Now it's settled around a terminal rate of around 5.5%. That means, 75 basis points of additional hikes. But what the bigger change was, it pushed out the market pushed out its view for the first rate cut from the end of this year to early next year. And that's much more in line with what the Fed is telling us. With a labor market as hot as it is, and inflation that's a bit noisy, although I think it's going to come down pretty steadily over the next 12 months, I think all of this means the Fed keeps marching ahead, holds policy tight for the bulk of this year. So it was good to see the market kind of get in line.
Marcy, when you're trying to figure out, investment strategy or the way forward and the outlook, what metrics in terms of economic data points and also market metrics do you keep a watch on the most?
Oh, that's a great question. I think what I would watch more closely is for when those leading indicators kind of pivot and turn higher. So the index of leading indicators, of course, is a really easy one to look at. Initial jobless claims, too, is something I keep a close eye on. I think weakness in the labor market is going to be one of the last shoes to drop in this, broader trend of an economy that is slowing. We think we have a very real risk of a recession, a mild recession, but a real risk of a recession in the second half of this year. So I would be watching some of those early indicators, but I think initial jobless claims right now, because I think the Fed is watching them so closely.
Right.
And like I said, I think it's going to let one of the later things to turn.
All right, so that's economic indicators. What within the financial markets, whether it's the equity side, whether it's the fixed income side, what metric there or metrics are you watching?
Yeah, so the biggest thing I'm looking for is this mismatch, I think, with earnings expectations. So I believe earnings peaked last year. I think that's what we're seeing in fourth quarter earnings, and I don't think fourth quarter is a one-off. I think margins are going to continue to be under pressure as pricing power has peaked out. But consensus is still looking for $223 on S&P EPS next year. Now, consensus has been trimming it fast. But our view is actually for a mild earnings recession with negative 9% year-over-year growth on EPS, which is about $200. So I'm looking for earnings expectations to continue to come down, again, to really reflect the macro realities right now.
Well, and Mike Wilson said that the equity market has one last stand before we fully price the earnings downside, and also noted that interest rates and the dollar need to fall for this stand to have a chance as well. And it kind of reminds me of what you're saying about earnings, Marcy. I mean, do you think the deal is kind of done here? Or do you think we have one more round of earnings before we really know?
Guidance was certainly weak last quarter, but we're anticipating some volatility in the near term as markets kind of reprice these earnings expectations. If you saw, last week was the worst week for the S&P 500 since early December, but we've had 3 negative weeks now in a row. And the market just kind of failed to breach 4,200. I think that, the very nice rally that we've seen since mid-October has really lost momentum. I think we get a bout of volatility. The other thing I'm looking at is the VIX. We haven't seen a VIX over 40 in this cycle, and I think that's one of those metrics that tells us, that the market has kind of flushed out. It's accepted the realities, the difficult kind of news, and could move back onto a sustained bull market. So I would watch for one more kind of round of volatility, I think, in the coming months to reflect, again, what is the reality of pretty weak guidance in earnings that are going to be under pressure.
Yeah, no, interesting. And right now we've got the VIX at 2106 as we speak. All right, so add it all up. Got about a minute left here. So where do you commit money in this environment?
Yeah, so we entered this year in terms of portfolio positioning, neutral stocks and bonds. We want to be really nimble, but frankly, we're still playing defense. So I'm in high quality investments. For me right now, that's U.S. equities over the rest of the world. It's large cap, and I think the market gets led by sectors like healthcare, energy, financials. Healthcare has lagged the overall market this year, so I think there's an opportunity to reposition. And then on the fixed income side, it's treasuries over credit. But I have my shopping list, right? So when we're ready to go from defense to offense, I think it's going to continue to be value over growth because I still like value right now. But we may get more interested in small cap companies, international, and we may start talking about extending duration even further on the fixed income side where we're neutral right now.
All right, we're going to leave it on that note. Nice overview and also some ideas in terms of where to invest. Marcy, thank you. Marcy McGregor. She's Senior Investment Strategist and Managing Director, Chief Investment Office of Maryland Bank of America Private Bank, joining us on the phone in New York City. Maddie, we've just got about 10 and a half minutes left in today's trading session, and equities just bouncing off their lows of the session, but holding on to some of their gains.
Yeah, a little bit of green on the screen there, but again, I go back to Abigail saying that it's just an anemic day today. Not a lot going on.
Yeah, volume really low, she said, and you've got kind of an even split in terms of names up versus down for the S&P 500. You are listening and watching Bloomberg Business Week, and this is Bloomberg Radio.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 7 minutes to go ahead of the closing bell, and these are some of the company stories we're following at this hour. Altria Group is in discussions to acquire Enjoy Holdings, a vaping startup, for at least $2.75 billion. This, according to the Wall Street Journal. Altria, which sells Marlboro cigarettes for the U.S. market, has for years been looking to diversify its business as smoking rates decline and taxes climb on tobacco products amid their link to health problems. We have got Fisker shares jumping the most in 2 years after the startup forecast bullish margins and signaled potential for positive earnings in 2023, the first full year of deliveries for its debut electric SUV. Today, Fisker shares are surging. Fisker is up now by 30.6%. Tesla has temporarily stopped rolling out its $15,000 driver assistance system. And let's get more on the story from Bloomberg's Dan Schwartzman.
According to Tesla's website, the pause affects customers who have opted in for full self-driving beta, a support feature for drivers who are responsible for operating their car at all times, but have not yet received a software update containing the feature. The National Highway Safety Administration said earlier this month the feature allows Tesla vehicles to exceed speed limits or travel in unlawful or unpredictable ways that increase crash risk. The agency cited examples including traveling straight through an intersection while in a turn-only lane, entering stop sign-controlled intersections without coming to a complete stop, and proceeding into intersections during a steady yellow traffic signal without caution. Charlie?
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you know Tim is on leave. Carol Messer, along with Bloomberg Quick Take correspondent Maddie Mills. We're here in our Bloomberg Interactive Broker studio. Maddie, we've got about 4.5 minutes in the day left for trading. We're going to head over to our TV team in just a moment. But you know what is the most read story in the Bloomberg in the past 60 minutes? It's not about the Fed. It's not about inflation. It's not about the markets. It's about Dilbert.
Yep.
Yeah.
Yep.
Scott Adams, he's the creator of the Dilbert comic strip. He said a number of business partners have dropped him in the aftermath of his controversial remarks about black people on a podcast last week. Dilbert has been pulled from all newspapers, websites, calendars, and books. The author put this out in a series of tweets today. He said his book agent dropped him, and the publisher of a non-Dilbert related book shelved that project as well. He plans to continue publishing the strip on his own website. And then, not like he has enough on his plate, who else has been commenting?
Elon Musk, of course. So basically, Scott Adams makes a number of racist statements on his YouTube channel. This comic strip's been, I didn't even realize this, 3 decades in syndication. And just
books, massive stuff.
Yeah, massive. And then just kind of seemingly overnight with this slew of commentary getting removed from syndication from a lot of these papers across the U.S. But Elon Musk coming in to support Dilbert, entering the chat on Twitter. He tweeted and deleted a Twitter reply about the situation, but since has gone back in saying that all of the media is racist, and a wide variety of other comments on Musk's Twitter that you can find. So he's got time to be on Twitter, that one.
Yeah, he does. He said, I don't agree with everything Scott says, but Dilbert is legit funny and insightful. We should stop canceling comedy. Yeah, and listen, Elon Musk, Tesla, it'll be interesting because especially we've got the March 1st Wednesday meeting, Tesla investor meeting, a lot of expectations about maybe succession and so on. So interesting to see how this all kind of plays out.
Yeah, and I know this isn't the biggest Tesla news also, but interesting. I'm still thinking about the Ross Gerber withdrawal from going after that board seat. Really interesting. And I think he's set to meet with some Tesla execs on that investor day on March 1st.
Absolutely.
So that'll be interesting. We got to get him back on to give us the inside scoop on that.
Tesla, one of the biggest gainers in the S&P 500 today. It's been on a tear. I'm going to talk about it a little bit among my gainers. Guys, we're going to head over to our TV colleagues. Count you down to the close on this Monday. Beyond the Bell, it starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic and Scarlett Thu counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast with our 2 favorite people, Carol Messer and Madison Mills. Madison filling in for Tim Stenevec. Welcome to our audiences across Bloomberg Television, Radio, and Originals, as well as those folks streaming on YouTube. Carol, stocks off the lows of the day. We should point out the price action today, probably not really representative, I think, of longer-term trends here. But we talk about sort of what this market is waiting for. What's going to be the next catalyst?
Right, exactly. I don't know. Is it earnings? Is it the Fed meeting? Yes, yes, and yes. Is it Jay Powell next week? You know, Abigail Doolittle kicking off our broadcast earlier talking about how much volume is down, I think more than 20% versus the average, and then how we've seen down volume as the equity markets have retreated overall this past month.
Yeah, and we also just had a guest on our show saying that we haven't seen a VIX over 40 in this cycle, and she said that this is telling us the market may be accepting the Fed and looking ahead to another round of volatility in earnings as we kind of wrap up this week, Scar.
Yeah, but it's been interesting to see that the VIX has been fairly muted, indicating that as much confusion as there is over the economic outlook, investors aren't ready to run for the exits.
Yeah, well, a lot of people are already at the exits. I mean, you do wonder sort of the competition, though, between, yields and the idea that sort of what are you getting in the equity market and whether it's even worth that risk, right? I mean, how many people have you talked to who said, yeah, look, if I can get 5-6% on short-term, whether treasuries or even corporate debt, why would you sort of go on the limb to buy, a growth stock that maybe could actually just sort of take a nosedive?
But the problem with treasuries is that you then, within 3 months, you're faced with the same question again. What do you do?
Yeah, a lot of reinvestment risk, of course, to that strategy here. But, of course, there's still a lot that needs to be sorted out. Like getting the closing bells here in New York, a Dow Jones Industrial Average higher on the day. All of the major indices higher, up about 0.2%. The S&P up about 0.3%. The NASDAQ Composite up about 0.6%, while the Russell 2000 up about 0.3%. Dow Transports, that's your relative outperformer here on the day, Carol. We're talking about a big move, actually, about 1.3% here on the day, as we still see a lot of people making a bet on railroads, making a bet on airlines, making a bet on car companies.
I always love transports in terms of what it could tell us about what's going on in the economy and the outlook. So really important indication. Having said that, people kind of meh, I think is how Maddie described it earlier. 261 names, Scarlett, in the S&P, actually posting some gains, and 240 lower to the downside today. And we do have a headline crossing the Bloomberg terminal, and dun-da-da-da, Elon Musk retaking the spot as the world's richest person. This is coming in a week when on Wednesday we're going to have that investor day. We're going to hear about maybe succession. On Friday we had Ross Gerber, right, and a Tesla investor, Tesla advocate, owns Teslas, backing off, wanting to take a board seat. So this is interesting, and just some perspective, kind of, Scarlett, if you will, one way of measuring kind of who's who in our business world.
Yeah, absolutely. We know the billionaires themselves like to hold themselves to that metric, and they measure their wealth according to where they stand and how they rank against others. And of course, Tesla is one big reason why the auto and components index is off to a 4.5% gain today. That's the biggest performer here in the S&P 500 when you measure it by 24 industry groups. Romain, you mentioned transportation index up about 2.5% as well. Chip makers also doing fairly well today. On the downside, utilities have been laggards, as has been the pharma names. The Mercks and the Eli Lillys have been drags on trading today.
All right, so let's get to it, folks. Scarlett breaking down the various categories in the market today, the winners and losers. I'm going to get to some of the specific names. Union Pacific, we've talked about this a lot today. This was top in the S&P 500, up about 9.3% in the trade today. Coming up after it said it would replace its CEO, Lance Fritz, this year amid pressure from a major shareholder. So you had that coming out. A new CEO would be tasked with improving operations and also boosting shareholder returns, as Romain was talking about transports and railroads, as the railroad also grapples with restless customers, and we know those labor relations, which have been certainly a lot of volatility there. So that name's certainly a standout. Take a look at Seagen, top in the NASDAQ 100, up 10.4%. You know this story, Wall Street Journal reporting earlier, Pfizer in early stage talks to buy the cancer therapy developer, said Seagen would be expected to command a premium above a $30 billion market value. So that's out there. And then Tesla, we just talked about Elon Musk retaking the spot as the world's richest person. Well, here's a good reason why. Tesla, it's top in the S&P 500 and NASDAQ 100. This company has been on a tear in terms of the share price. Stock is up about 66% year to date, up approximately 90% from the low on January 3rd of this year. And of course, big news this week, Maddie, will be, of course, that March 1st investor event. So we'll be watching to see what he has to say and what the company has coming forward.
Yeah, definitely looking forward to that. But it's M&A Monday on our decliners today. We're going to start with Tegna, down on news, of course, that its deal with Standard General may be dead on FCC opposition. That stock dropping by as much as a little close to 19% on the close on that news. The regulators calling for a hearing, pushing back the timeline on that decision, and Standard General did ask the FCC to change course on that decision. But moving into some healthcare stocks, Scar mentioned the healthcare index dragging down the S&P today. I want to talk about Pfizer, as Carol mentioned, in talks to buy Seagen, which is pushing up Seagen stock, but Pfizer down on the day by just a little over 2% there. With COVID on the decline, Pfizer, of course, is looking for some diversification and for somewhere to put all of that cash that they've brought in over the past couple couple of years during COVID, but the wild card is whether Merck or anybody else is going to step back in and create a little bit of a bidding war there.
Yeah.
Merck is down
Well,
0.5% as well.
Pfizer needs to look a little bit closer, though, right, at the stock. I mean, we're talking about, stock hitting a fresh 52-week low today. Even if it weren't for the downdraft today because of this rumored merger here, I think there's still a lot of concern here. I mean, what's the upside that we're looking at, Maddie?
Yeah, I mean, I think for Pfizer, it's really looking into, again, something to do with that cash to continue to grow the company because of all the cash that they brought in from COVID vaccines, which is, of course, the main profit driver for Pfizer. But what are they going to do as the pandemic starts to wane? And that changes the equation for them a little bit.
Yeah, absolutely there. All right, let's take a quick check here what's going on in the yield space. And frankly, not a whole lot was going on today. Of course, we had that big sell-off in treasuries last week and really the couple weeks before that. A little bit of a pause here on the day. You're down basically about 3 basis points on the 2-year yield and basically on change on the longer end of the curve at the 20 and 30-year. Your 10-year yield, though, still camped out at 3.9. Of course, we could see a big reacceleration in any of those yields at any point in time, depending on, I guess, what happens here in the week ahead. We talk about the fact that there really isn't a whole lot of catalyst when it comes to central banks and themselves, but of course we are still getting some earnings, Carol. I know we're going to get Target tomorrow morning and quite a few other companies as well. Zoom actually crossing the wire as well. Remember when we all used to use
Speak and you
Zoom?
shall receive. It's moving around in the aftermarket too.
Yeah, 4Q numbers coming in, adjusted EPS, a big beat here, $1.22. The street on average was looking for 80 cents a share. Revenue coming in at $1.12 billion. The street was looking for 1.1. Here's your guidance going forward. Full year 2024, adjusted EPS $4.11 to $4.18 a share. That's above the street estimate on average of $3.53. And for the first quarter, and for the full year revenue, 2024 revenue of $4.44 billion to $4.46 billion. That's slightly above, at the top end of the range, slightly above the average of 4.6 that the street was looking for.
Yeah, I'm curious, when you talk about Zoom, really they're banking on the enterprise customer and signing up more enterprise customers. Where's the growth going to come from at a point when everyone's going back into the office? Yes, people still work from home on Fridays, and so they'll...
And Mondays.
And Mondays. So they'll keep their accounts intact, but they're looking for growth, right? And it's not as if individuals are signing up for the premium accounts on Zoom.
It's all about enterprise customers. You were absolutely right. I mean, I'm looking at their press release, and they talk about fiscal year 2023. They talk about our growing base of enterprise customers, increasingly looking to Zoom to provide, a seamless communication, blah, blah, blah. They did say evident in the 27% growth in customers contributing more than $100,000 in trailing 12 months revenue. So, yeah, it's ultimately, do people stick to it, Maddie?
Yeah, but looking at those
I'm still
earnings,
using Zoom at work.
I'm still using it, but this is one of my favorite quotes on this from Citigroup's analyst Tyler Radke. He said, "Our primary concern is Zoom's online business, which has some of the highest churn rates in software, about 40% annualized." I think we all know somebody who's signed up for a free trial run of Zoom. They hold on to that 30-minute or less access, and they don't actually pay for the subscription, which is critical to the business.
There's also the competition aspect as well. Remember when this whole pandemic started, Zoom was kind of the only game in town. I mean, you had some competition, obviously, from Microsoft and a few others, but a lot of companies have really sort of beefed up their video offerings as well. And, Zoom's not the only game in town for
Cisco
corporate clients.
WebEx, right? Microsoft Teams, Google Meets.
Is WebEx still around?
I know.
It was for a while.
Okay.
Hey, but shares of Zoom up 3.5%. I think the stock's up about almost 9% so far this year. So investors at least liking what they have. I also think, guys, this is part of that pandemic readjustment, right? We knew everybody was all in during the pandemic. Then you came after it as people started to go back to work, and there was that pullback. And now we're finding, okay, kind of what is the net neutral, right type of business for Zoom going forward?
Yeah, and I'm going to be looking at Workday as well. We're expecting earnings from them today up about 9% year to date, but also facing some lawsuits at the same time. So I'm really interested to see how the market responds to Workday.
Well, those earnings actually did cross a little while ago. Shares relatively unchanged here. Adjusted EPS did beat, as did the revenue. Probably the big news, though, is that naming a new co-president and vice chair of the company. So something to keep an eye on.
Yeah, it's keeping us all busy. A lot of stuff coming at us on this Monday. I'm just not quite ready for it. So thank God it's almost Tuesday. All right, guys, that's a wrap. Our cross-platform coverage.
How many days a week are you working?
I don't know.
I mean, Carol only works Mondays and Fridays. She takes Tuesday.
Anybody hear anything? I just hear static. All right, that's a wrap. Our cross-platform coverage, radio, TV, Bloomberg Originals, and of course on YouTube. We will see you again beyond the bell, 4 p.m. Wall Street time, same time, same place tomorrow. All right. right, man. I'm glad to see almost Monday is over because, man, it's a rough one. But I'm so delighted at our next guest. Looking forward to bringing him in because we want to talk a little bit about the startup world. Bloomberg has reported AI has been one of the only sectors where startups with little or to no revenue have raised huge funding hauls, even in an environment where checks are hard to come by. We talked about it, ChatGPT, just with our Brad Stone. So we wanted to get some thoughts about the startup world, and we bring in someone who has built 2 unicorns. So great to have back with us, and here in our Bloomberg Interactive Brokers studio, Ori Levine. He is co-founder of Waze. They, of course, were sold to Google for more than $1 billion back in 2013. He was an investor in MoveIt, which Intel bought for $1 billion back in 2020. His book, which we recently talked about, is Fall in Love with the Problem, Not the Solution, a handbook for entrepreneurs. Ori, so great to have you here with Maddie and myself. How are you?
Thank you. Really happy to be here. I'm excellent.
So we're so glad to have you back with us. So much to talk about. We've got 2 nice long chunks of time to do it. Talk to us about the startup world right now and how you see it, because there is a lot of attention on AI and generative AI, courtesy of that Microsoft investment. How do you see it? How do you think about it?
So look, startups are here to stay, right? At the end of the day, there are many startups that are starting from the problem and trying to create value through solving a problem, and they are here to stay. And at the same time, we have seen in the recent years some overinflated valuation that created some tensions with the bearish market that we are experiencing in general. And
was it just because there was so much money floating around out there?
Major part of it is yes, right? And so for a certain extent, I would say when you are being overwhelmed with the amount of money, then you are actually urged to spend it in order to show progress. And the result is that you might be spending it on the wrong things.
Well, I love to hear you explain it in such a simple way, but the way that I always think about it is just that's how you get a WeWork is always what I think about because I'm obsessed with that story. What do you think is, given that, do you think that maybe in a higher interest rate environment might actually be good news for the startup world?
You know, at the end of the day, the higher interest rate is in order to fight inflation. And over the years, we have seen that that sort of medicine actually works, right? And so we are likely to see that until we will see some sort of a slowdown in the market, and then interest rate will start to go down again, and growth is going to come back.
But does it make it harder to get funding, right?
Look, I describe building a startup in 3 dimensions, right? It's a long roller coaster journey of failures. And it's always like that, right? Now, if you will add to that, on top of that, the environment that is making it even tougher, and I would call fundraising as a roller coaster in the dark. You don't even know what's coming. And these days, it's longer and it's harder, but it was longer and harder before as well.
Ori, how many times did people say no, 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 no?
Hundreds of times. Hundreds of times.
How difficult was it? And were there times where you're like, I'm out of here?
You know, one of the things that is going to make entrepreneurs successful is the grit, is the never give up attitude, right? And so you will hear no so many times, and you might be going home crying, but it will never discourage you from your mission.
So you kept at it, obviously, many times. But it is interesting because money, support, all these things are necessary. I mean, was there a moment, whether it was Waze or something else, where you were just like, gosh, you know, we've got a couple of days left or a couple of weeks left of money, or something where you realize something's got to change positively in our direction, or did it never get to that point?
I would say that, you know, with Waze and MoveIt and 10 of other startups that I was involved at, in all of them, throughout the journey, we ran into the near the end situation, right? Really close to the end situation. And in most of it, we will recover, right? So at the end of the day, look, the persistency and the value that you create is going to be paid back. Now, if you don't create value, if you don't solve a problem, if you don't figure out product market fit, you will die. Unfortunately, you will die.
You can't just create, right? It's got to have a reason to exist.
Exactly.
Yeah.
And real value. I do wonder if we can also just go back to the idea of all of the no's in the room really quickly, because it's such a great point and question, Carol. I wonder if you can talk about the challenge of maybe not being part of the Silicon Valley bro community straight away. Like a lot of times we talk about this, the VC folks who all went to Stanford together, investing in one another, and you come from a little bit of a different background. Was that an added challenge for you?
So for a second, I would say Israel might be even a better ecosystem than the Silicon Valley for startups, right? And so Israel occasionally called Startup Nation, and there is a good reason for that. The ecosystem is actually very supportive and very powerful. And so there, at the end of the day, there are more startups per capita in Israel than there are in other place in the world. And it turns out to be working beautifully, right? At the end of the day, if you start in Israel, you might have equal likelihood of being successful than if you start in the Silicon Valley.
How come? Talk to us a little bit, like, because I feel like we've talked a lot over the decade and then some about what a great incubator Israel is for so many different types of companies and technologies. So what is the difference? I think we just assume everything is Silicon Valley still in terms of the narrative, but what are the differences? What is it about the environment in Israel that attracts or makes it such a fertile ground for startups and ideas?
So I would start with generalizations, right? So at the end of the day, what you want to have in an ecosystem that supports startups are actually four cornerstones, right? So entrepreneurs, investors, and then engineers and experience. These are the four cornerstones. And entrepreneurs will usually go into this journey if the fear of failure is low. And the fear of failure is low in the Silicon Valley, and it's low in Israel. And it's actually high in many other places. People are afraid to fail. The supportive of the investors is critical. It's the fuel of the ecosystem, right? And so you need to have regulations that enables that, and in many cases you need to encourage them. But at the end of the day, if you invest in Silicon Valley or you invest in Israel, from taxation point of view, is going to be the same. So really allowing the same thing. Engineers, a lot of engineers in Israel, and experience. And one of the things that actually growing rapidly in Israel, more and more entrepreneurs are paying it forward to the community. I'm doing that through the book that I'm trying to help entrepreneurs to become more successful. But the major difference is actually resides someplace else. Israel is in a tough neighborhood, and when you grow up in a tough neighborhood,
talk about grit.
You grew up tough, right? And so military service is mandatory in Israel, and the result is during your 3 years of military service, you realize that giving up is not an option, and you realize how to build and work in teams, and the loyalty and commitment that you have to the mission is way greater. And these actually makes the Israeli ecosystem so unique.
Did you find, we've only got about 30, 40 seconds, then we'll come back and continue the conversation, but your military experience, were you often in your pursuit of your companies and building of your companies drawing on your experiences?
So that was a long time ago, right?
No. But you know what I'm saying.
But yeah,
it
absolutely.
Shapes you.
You know, at the end of the
Or you
day,
could say
I
no.
have some friends that I've been doing the military service with them, and they are now, in different startups of mine. And obviously, you realize that there are a lot of things that you have learned over there, and you don't pay attention that you've learned them there.
Yeah, I think about, like, in general in life, right? There's, hard things, and then there are really hard things, right? Yeah. And I bet when you've had that experience, you can really kind of pick through things and really figure out where you should devote your attention to, the things that really matter. Ori, don't go anywhere. We're going to come back. Ori Levine's going to stay with us, co-founder of Waze. He does have a book out. We've talked about it on air, Fall in Love with the Problem, Not the Solution, a handbook for entrepreneurs. He knows something about it, having built several unicorns, several companies. As they say, he's a serial entrepreneur. He's here in studio, and we'll come back to him in just a moment.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. The Dow, the S&P, NASDAQ all advanced today, but after the bell, a couple of high-profile earnings reports. Zoom Video Communications posted quarterly sales that slightly edged analyst estimates as the company works to retain customers in a post-pandemic world. After ours, we've got Zoom up by 6.2%. Occidental Petroleum reported adjusted earnings per share for the fourth quarter that missed the average analyst estimate. After our shares of Occidental down by 0.4%. Stocks ended today with modest gains after fluctuating for the final stretch of the trading session as investors attempted to come to terms with Fed policy that could remain restrictive for longer than previously expected. S&P today up by 12 points. That was a gain of 0.3%. The Dow up 72, up 0.2%. NASDAQ up 72, higher by 0.6%. 10-year yield 3.92% with a 2-year yielding 4.78%. Spot gold up 0.3%, $18.17 the ounce. West Texas Intermediate crude down 0.7%, $75.78 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. This is your daily reminder from Innovation Refunds that 70 to 80% of small businesses are good candidates for taking the employee retention credit. Don't bother trying to navigate hundreds of pages of tax code to learn if your business qualifies for ERC assistance. Let the tax professionals at Innovation Refunds do the work and help you secure the future you want for your business. Learn more at getrefunds.com.
All right, well, we're going to get back to our guest in our Bloomberg Interactive Brokers studio. We are here with Ori Levine, co-founder of Waze and also author.
Which you said changed your life.
Which changed my life completely because I was living in Los Angeles at the time, driving to my weird internships at 4 a.m. and having Waze help me navigate the city. So it was very, very critical for me. But Ori, I want to talk about how the tech has changed, because what I think makes Waze so interesting is how much it relies on the community, of course, to help you understand where the bad traffic is and where things are difficult that should be avoided. How have you seen that community-driven technology change over the course of your career?
So crowdsource is a method that is not widely used, but at the end of the day, it's the best way to actually gather information and gather data, right? So occasionally we are doing that because we are looking at the general behavior, but the case of Waze is really unique because we have created a paid-forward social network of drivers, right? So you report back to the rest of the drivers and help them to avoid traffic jams, to avoid speed traps, to avoid accidents and so forth. And in return, you are doing the same for the drivers behind you. And so this magic that we help the rest of the drivers actually turns out to work beautifully and created the best driving tool there is.
Do you think that other big tech companies, social media companies, could learn a lesson from that? Like, we talk a lot about the challenges of social media companies, Instagram, the way that it's impacting young people, et cetera. Do you think that other big tech companies could learn from that community helping each other energy?
So I think that Waze is all goodness. In some of the other social networks, it's not necessarily the case, right? And occasionally we are seeing overuse by, in particular, younger generations. And you look at it from the outside and you say, no, there is something wrong here, right? It's nearly impossible that they're spending so much time, or this is so important for them that they might be living or dying by that. And I think that the essence of all businesses in the world should be very simple: create value. And then the value that you are going to get out of that is a derivative of the value that you create.
The thing I love, and I've talked with Kathy Wood a lot of ARK Invest, this whole idea of innovation disruption, and I think it gets thrown around a lot. But this whole idea of a company like yourself, like creating Waze, totally went after the establishment and changed the way we do things. Uber did it with driving, right, and getting a car. It's like just there are better ways, different ways, substantially changing the way we live and work, if you will. How do you look at it the future, and what kind of catches your attention about things that you think, okay, this too could really change the way we do things in a better way?
So you're right. Disruption is not about technology. It's about changing behavior, and at the end of the day, changing the market equilibrium. Now, if you look at the pace of innovation, and if we will have a time machine, and I will send you back into 2007, that means that I'm going to take away Waze from you, and Uber, and your iPhone, and Netflix, and pretty much everything that you're using every day, right? So it's unclear that we will survive, right?
Right.
This is how fast things are changing. In fact, if you try to ask yourself, so what does it mean about the future? So for a second, I will make the following statement, right? A decade from now, if you think of the top 10 companies of the world, right? So Apple and Amazon and Microsoft and Google and Facebook and Tesla and whatever, and ask yourself, which one is going to be in the top 10 a decade from now? Now, the answer is that we don't know, but only 5. If we would know, then I will tell you, you know what, sell short on those that are not, and this is it, right? And we are done. But we don't know. The more interesting perspective is going to be which companies are going to take their place in the top 10. Some of those, you haven't heard the name yet. This is how fast things are changing, right? So in particular, you look at AI today and you say, wait a minute, this is actually entering into our radar 2 months ago, right? Before that, you never heard about ChatGPT or GPT in general, even though that the technology is being developed for a long while now.
Right.
But all of a sudden, we are experiencing some sort of change of behaviors, right? And the change of behavior is not whether or not the technology is good or not good, or good enough or not good enough. It's not about that. It's about the fact that there are some people that are going to ChatGPT before they go to Google. And when this happens, that changes the behavior, right? Now, in reality, you would say, wait a minute, it's not good enough. And actually, instead of getting multiple perspectives on the search of Google, and then you can actually choose the one that makes sense for you, you're going to get one. And it's going to be written in a beautiful way that it makes perfect sense, even though that it might not.
Right.
But it's still the case, right? Now, the reality is that you look around it and what happened in the market, and you say, wait a minute, Google just announced their own, right? So obviously, they haven't built it in the last 2 months, right? They have built it for a long while. And now they realize that maybe even if it's not ready, we have to go to the market with that, because otherwise we might be missing the opportunity here. And they're not the only one, right? So all of a sudden there is a realization that, okay, change is likely to happen in the market in the way that we are generating text, possibly, searching for information, definitely, because you're going to get nicer results, right? If you search Google, you're going to get whatever some other actually generated in a single web page. But if you use the language regeneration, then you're going to end with something that is written beautifully, and you might like it.
So all the time that we're spending since Microsoft, the news of Microsoft and their investment has come out, it's smart for us to be focusing on this, because there's a lot of smart companies that are focusing on this. And so it has the power to dramatically impact our behavior, or already is.
In my mind, definitely yes.
Okay.
And it's still a long journey for ChatGPT and anyone else that is doing AI and GPT language regeneration. There is still a long way to go.
So if Google hired you right now as a consultant specifically on its rollout of its GPT, what would your biggest piece of advice be about how they could corner that area of the market?
Faster,
even if it's not good.
Look, everything that you go to the market, you go with something that is not ready, right? You go with not good enough first, and then you iterate with the feedbacks that you get from the users.
Software does this all the time, right? They throw it out there and we all play with it. And
Waze was not good enough at the beginning, right?
Yeah.
And there were multiple iterations until it became good enough. And when it's good enough, then this is where you are going to win the market. So at the end of the day, now they could have done that faster, right? But they actually look at the disruption as a threat. And the real way to look at disruption is as an opportunity. Because if you take Uber, for example, Uber is an amazing example of disruption. Before that, we only had taxi drivers. That's it, right? Now, the market today is 10 times bigger than it was before. 10 times bigger for on-demand trips, right? In this 10 times bigger market, there is room for Uber and Lyft and Grab and 99 Taxi, and there is 3 times bigger room for taxi drivers. So disruption is actually creating an opportunity, because what we are saying about disruption is that it changed the market equilibrium. Now, by definition, the market equilibrium, the new one, is better than the previous one, because otherwise the market will not go there.
Yeah, no, it's really fascinating, right? It didn't just displace, it actually grew a market size.
Exactly.
And access and behavior. So people who didn't necessarily order cars to do things, all of a sudden they could.
Exactly.
So interesting, Ori.
So-
Go. No, go.
20 seconds, 30 seconds, what's the next problem you're working on? Gotta be quick.
So, I'm really proud of my books. Steve Wozniak, co-founder of Apple, called that the Bible for entrepreneurs, and I think that this is going to have a bigger impact than all of my startups, because it's going to help entrepreneurs to become more successful.
Well, we were saying a lot of people didn't have a playbook, right? And now they do have a playbook, thanks to you. The book is called Fall in Love with the Problem, Not the Solution, a handbook for entrepreneurs. Ori, it was so great to have you back in studios. Welcome anytime, so come back soon.
Thank you.
Really appreciate it. Ori Levine, he's co-founder of Waze, as we mentioned, that book, Fall in Love with the Problem, Not the Solution, a handbook for entrepreneurs. But it's so true, right? Figure out a problem.
Yeah.
Watch the market size, or look for the market,
Yeah.
and then go at it. Or, of course, in our Bloomberg Interactive Broker Studio.
Yeah, really interesting to hear you speak with us, Ori. Thank you so much. We're going to get you all a check on the latest world and national news with Nancy Lyons in D.C. Hey, Nance.
Thanks, Madison. Well, there's more fuel for the debate about how the COVID-19 pandemic started. The Wall Street Journal reports a classified document from the Energy Department now points to a lab leak in Wuhan, China, as the most likely source of the outbreak, though it does say it has low confidence in that conclusion. Andy Pekosh is with the Johns Hopkins Bloomberg School of Public Health.
We haven't seen the report. We haven't seen what data has caused the Department of Energy to shift from to this low confidence reading. And so it's a little bit difficult to try to figure out what's driving this change in stance.
Johns Hopkins immunologist Andy Pekosh says a fair amount of evidence still points to a wet market as the likely source, but we won't know for certain without information from China. China is calling the latest assessment a political smear. You can catch the full conversation on today's Bloomberg Daybreak podcast. President Biden has ordered federal agents to go door to door in East Palestine, Ohio.
A White House official says representatives from FEMA, the Centers for Disease Control, and the Environmental Protection Agency checked in on about 350 households over the weekend. They hope to reach another 50 today. So far, President Biden has opted not to visit the derailment site, and that has led to criticism from leading Republicans, including former President Donald Trump, who handed out fast food and water in East Palestine last week. Biden says federal agencies were on the ground within hours of the Norfolk Southern derailment. In Washington, I'm Nathan Hager, Bloomberg Radio.
Temporary allotments of SNAP benefits put in place during the pandemic will be expiring this week for about 30 million people. That'll mean between $90 and $250 less a month for many recipients. Kyle Wade runs a food bank in Atlanta.
This is going to increase demand at food pantries all across the country.
Kyle Wade with the Atlanta Community Food Bank. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. I'm Charlie Pellet. We check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all finished the session in the green. After hours, keeping an eye on Zoom video communications. That stock now up by 5.3%. Zoom posted quarterly sales that slightly edged analyst estimates as the company works to retain customers in a post-pandemic world. Stocks ended the session higher today, modest gains after fluctuating in the final stretch of the trading day as investors attempted to come to terms with Fed policy that could remain restrictive for longer than previously expected. As for the economic backdrop, specifically jobs and wages, Marcy McGregor is the head of CIO Portfolio Strategy at Bank of America, and she was our guest right here on Bloomberg Business Week.
With a labor market as hot as it is, and inflation that's a bit noisy, although I think it's going to come down pretty steadily over the next 12 months, I think all of this means the Fed keeps marching ahead, holds policy tight for the bulk of this year. So it was good to see the market kind of get in line.
10-year yield, 3.91%, with the 2-year yielding 4.77%. S&P up 12, a gain of 0.3%. The Dow today up 72, up 0.2. NASDAQ today up 72. That was a gain of 0.6%. West Texas Intermediate crude fell 0.7%, 75.77 a barrel, and gold was up 0.4%, 18.17 the ounce. Again, recapping, S&P up 12, a gain of 0.3. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week on this Monday. Carol Master along with Maddie Mills live in our Bloomberg Interactive Broker studio. We are on YouTube, on the Bloomberg YouTube channel, and also, of course, streaming on Bloomberg Originals as I hit my mic and I'm going to get yelled at. Don't yell at me, everybody. Coming up later this month, the 40th annual Paley Fest, which celebrates the world of television.
Yes, a world that I love to live in and thrive in, and I can't wait to discuss it with our next guest. We've got Renee Reyes, Vice President of Public Programming at the Paley Center for Media, and he's joining us from Zoom in Los Angeles. Renee, thank you so much for being here to chat with us about Paley Fest. Talk to us a little bit about the event for those who are totally unfamiliar with it.
Well, if you're a television fan and you love the diversity of great shows that's on the air right now, it's a place you'll want to be from March 31st through April 4th. Dolby Theater in Hollywood, we're celebrating 7 shows that we really think are defining creative excellence in the television landscape right now. We've got incredible genre series like The Mandalorian, our opening night on the 31st, and we'll have members of the cast and creative teams of Abbott Elementary, of Yellowstone, of Grey's Anatomy. We're saluting James Corden, and we have Yellow Jackets, a great new show from Showtime, and also The Marvelous Mrs. Maisel, which is beginning its final season.
Yeah, it's interesting, like, you think about the trajectory of just television, over the last 4 decades and then some. Tell us about how you think about the night and how you think about who you want to have there.
Sure. Well, it really is meant to be a true celebration. That's the only agenda we have, is to celebrate sort of what it takes to make these shows come together. And, be welcoming the stars on stage, and they'll get to meet the audiences who make these shows the successes that they are in many ways. The audiences of passionate fans who gather, and we'll be hosting, a special screening as well, too. A lot of times we're previewing a brand new episode. But I really think the magic of it is that connection between the audiences who appreciate great TV and the stars and creators of those series who make it happen. It varies each year because of that, but I'm looking for shows that sort of are resonating with audiences right now, or doing something different in television, or celebrating a milestone like James Corden. We've had the pleasure of honoring him in the past, but he's kicking off his final month of shows with our event, and that should really be a special night.
I do feel like there's something going on with late night TV too, where, we're seeing several hosts kind of stepping back, right? Yeah. Trevor Noah and some others. And I do wonder, I'm looking forward to what he has to say, because James Corden is just entertaining. But how do you guys think about it in terms of, trajectories and arcs of different types of programming and late night programming in particular?
Well, yeah, I think Corden, as you said, is very entertaining, and I think he's done something that's different in the landscape. His show sort of stands out just because of the sort of popular sketches that he sort of introduced, like Carpool Karaoke, which took on its own life on the web, and these crosswalk musicals, which really have brought these Broadway shows to the fore on television, on late night television, in a big way that we haven't seen in quite a while. It's a really varied landscape right now, but it's even going to change some more after this, after Corden leaves, and those changes are exciting. They always sort of push us forward, but you can always find connections to what's been at the fore of late night throughout the decades, and that's really what we look at the Paley Center and with our incredible archive of television.
Yeah, it's interesting to hear you talk about kind of the virality of James Corden's work. It reminds me so much of Quinta Brunson's work with Abbott Elementary. She was making all of this viral content at BuzzFeed, and then of course became a writer and you know, created this incredible show that I'm viscerally obsessed with, along with every other show on your lineup. So really bummed I'm not going to be in LA. I wonder if you can talk about the importance of having just the diversity of programming you have in here. Like you've got Yellow Jackets, which is about a group of teen cannibals. And then you've got Abbott Elementary, which is just the most heartwarming sitcom about teachers in this school. And then you've got Yellowstone in like the depths of this ranch and a super crazy family drama. I mean, you just cover so many bases.
Somebody watches a lot of television.
Yeah, let me run through the plot of every single show. I'm really sorry. That was way too long.
No, it was perfect.
Of a description. That was insane. But yeah, what do you think about that diversity, Renee?
Well, that was beautiful, and you are our audience, and I'm so glad you can. I'm so unhappy you can't be in LA at this time right now, but hopefully next year. You know, it really it's kind of a golden age of television that we're in once again. There are so many choices. It makes programming the festival on our side that much more difficult, just because there are so many great shows out there. But for viewers, if you can find basically any type of show that you're interested in, and that just really pushes us forward creatively. The one thing that I think it's different and lacks sometimes is that we no longer have these sort of shared communal experiences of television in the same way that we have across the decades. We still get them when there's a big event like the Super Bowl or the Oscars, or that's something that we all watch live together. But I miss that water cooler sort of experience of TV and the shared part of it. But you can still find it. It's just in different ways now.
I have to say, it's funny that you say that, because I was thinking about, with obviously so much streaming, and you're right, like you can... guilty, download and watch how many different episodes back to back and binge. But what's interesting is I love when there's a series, like right now I'm watching Shrinking, and one is released per week, and I'm kind of living it that way, and it's kind of fun to go back to that model. And I agree with you, Renee, like I miss whether it was Sopranos or something, or you'd come back, or a Dallas, or I don't know, pick your show. I love Dallas, where people would all come in and be like, "Oh my God, what happened over the weekend, or on a Thursday night or Wednesday night?" So it's interesting to see the evolution. But having said that, the explosion of content is just pretty remarkable, and I guess you guys see it front and center.
That's absolutely right. It is remarkable. It's funny that you mentioned, being able to watch a great show, really like Shrinking, which I think is a fabulous comedy with great performances. Watching it on a weekly basis, and so many people feel that that's a new innovation, but it's basically what television was. But it's true. We're all busy, and having those bites each week of a show, I think actually is the right pace for many things. A lot of things get spoiled if you can spoilers get revealed if you can watch everything all at once, and it's nice to build that momentum of a series.
Yeah, we have conversations in the makeup room. They're like, "Okay, how far are you in on this?" Because we don't want to ruin anything for you. Renee, thank you so much. So appreciated, and I think we should just shift the show to the West Coast during this.
Oh, yeah, absolutely.
We could just check out each of these events. Renee Reyes, Vice President of Public Programming and Festivals at the Paley Center, joining us via Zoom from Los Angeles. Check him out on Twitter, or check out the center at Paley Center on Twitter for more information. You're listening and watching Bloomberg Business Week. This is Bloomberg Radio.
company news headlines on Bloomberg Radio.
4:53 on Wall Street from Bloomberg World Headquarters. I'm Charlie Pellet. Zoom video communication shares higher after hours after giving an upbeat profit forecast for the current period. It is a sign that customers are sticking with the video conferencing software even as they return to pre-pandemic habits. After hours, Zoom video communications up now by about 6.2%. Also reporting after the bell today, we heard from Occidental Petroleum. Oxy reporting adjusted EPS for the fourth quarter that missed the average analyst estimate. After hours, shares for Occidental are trading lower now. They are down by about 1.4%. Citigroup expects to incur about $190 million in costs from winding down its consumer and institutional banking operations in Russia. And with that story, here's Bloomberg's Dan Schwartzman.
Charlie, the bank also said in the filing that it had $3.1 billion of country risk exposure to Russia at the end of last year, down from $4.6 billion as of September 30th. Citigroup announced in August that it would wind down its consumer and commercial banking operations in Russia after President Vladimir Putin's invasion of Ukraine complicated the sale of the business while continuing to try to sell certain consumer banking portfolios in the region. In October, the bank said it would also end nearly all of the institutional banking services it offers in Russia by the end of the first quarter this year. Charlie?
And that's Bloomberg's Dan Schwartzman. Citigroup shares today up by about 0.6%. Elon Musk, once again, the world's richest person, shares up today by 5.5%. I'm Charlie Pellet. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody. Yep, Bloomberg Business Week, getting ready to wrap up the Monday edition. Carol Masser along with Maddie Mills. You know Tim is on leave. Charlie mentioned, Maddie, Zoom, and we do see this stock continuing to trade higher in the after hours following earnings. Stock's up about 6.2%. A lot of it has to do with gains in the profit outlook. We'll talk a little bit more about that in just a moment. In the meantime, let's get back to Washington and a check on world and national news and Nancy Lyons. Hey, Nance.
Thanks, Carol. Well, the head of Norfolk Southern says the railroad will start tearing up the tracks and removing more contaminated soil in East Palestine, Ohio on Wednesday. That follows the derailment and toxic chemical spill that's put growing pressure on the railroad as well as the Biden administration. CEO Alan Shaw tells Bloomberg there are 2 sets of tracks running through the area and they'll work on one at a time while keeping trains running at reduced speed. The U.S. Supreme Court will be hearing arguments tomorrow in a case brought by Republican state attorneys general to block President Biden from forgiving student loan repayments. Bloomberg's Irv Chapman with the preview.
The president took executive action following Congress's inaction. Libby Cantrell, head of public policy for the firm PIMCO, said in a Bloomberg interview.
The legal justification for the student loan cancellation was a bit tenuous. Even Speaker Pelosi had said that Congress needed to do it, and Joe Biden had said that at one point as well. We would be surprised if the court sided with the administration, but it's also a really important issue for a lot of Democratic voters, in particular a lot of young voters.
The Supreme Court will first have to reconsider its opinion a decade ago that invited state lawsuits to overturn administration policy decisions. In Washington, Irv Chapman, Bloomberg Radio.
UK Prime Minister Rishi Sunak is touting what he calls a decisive breakthrough with the European Union on one of the biggest sticking points after Brexit, trade arrangements for Northern Ireland.
It's about stability in Northern Ireland. It's about real people and real businesses. It's about showing that our union that has lasted for centuries can and will endure.
Prime Minister Sunak announced the deal alongside European Commission President Ursula von der Leyen. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Carolyn Madison.
All right, Nancy Lyons, thank you so much. This is your daily reminder from Innovation Refunds. It's time to take advantage of the newly extended employee retention credit. Innovation Refunds has helped small and medium-sized businesses impacted by COVID-19 claim over $3 billion in refunds, and they're standing by to help your business get back the money it may be eligible to receive. To learn more, just head to getrefunds.com. Carol Masser here with Maddie Mills. We mentioned Zoom. Charlie mentioned Zoom too. This company rallying about 6% or so in the after hours after profit outlook beats analyst estimates. So we have that going on. And then, Maddie, we did have what you talked about is the continuing job cuts that we're seeing in the tech space.
Yeah, Twitter announcing more layoffs overnight. That follows a layoff of about 3,700 employees back when Elon's takeover first occurred. And we also had some news cross during our show that Elon is once again the richest person in the world. So he has retained that metric for himself yet again.
It's like the story that just keeps on giving.
Yes.
And don't forget, on March 1st, Wednesday, the big Tesla Investor Day. So that's going on. And also among our most read on the Bloomberg, want to get to this. It's a Dow Jones story. Chris Rock is finally ready to talk about Will Smith's Oscar slap.
I will be tuning in. Wherever that is, I've got a seat at that table.
It says he's doing it on his own terms. I guess he's doing that stand-up comedy special. It's going to stream live on Netflix a week before the Academy Awards. I cannot wait to see what he has to say.
That is a great way to tease viewership of that program for him.